Property Investing Insights, your authority on all things property investing, finance and wealth creation with Right Property Group.
G'day, how you going? Phil Tarrant, co-host of Property Investing Insights. Hope you're well. Hope you're fired up, pumped, pushing ahead with property and property investing. And I sort of get a bit nervous when I hear the introduction of these things and it says the authority of finance, wealth creation and property. Well, just as a disclaimer, because it is a finance podcast and I'm not a finfluencer, which ASIC is all against. I'm just a journalist that chats about property. I'm not an authority on finance, wealth creation or property. My job is to have discussions with authorities of finance, wealth creation and property. And joining me in the studio, Reshmi and Victor Kumar, the brains trust of Right Property Group, RPG. I still can't call it RPG, Victor. How you going?
Good, Matt. Good.
Yeah, RPG.
Yeah, I thought
rolls off the tongue.
Yeah, it does roll off the tongue, but call us by any name. Rose smells just as sweet.
Are you happy with the name? Is it still the right name for the company? Right
It is
Property
absolutely
Group.
the right name.
Yeah, it's the right name at the right time, at the right place.
With the right property.
And the right property and the right people, importantly.
Yep.
And a lot of people like, yourself and Reshmi very much the face of the business, but you have a very deep team that often you only really get to know if you're down a pathway of securing property. But they're the engine.
They are. They've got the right knowledge because one of the things that we did when we initially started the business was our criteria for employment was that they had to be property investors before they could work, right? Or if they were not, then they became investors really quickly. So that they were actually going through the same journey that then they are helping the clients undertake. Because it's all good to work off a textbook, but unless you've got some runs on board, that's when you really know the nuances of the different markets, the different scenarios, and the what-ifs.
So, Reshmi, if you and Victor, obviously, you chat a lot about property. I've known Victor for, this is going to date us, it's got to be nearing 15
Just a year and a half?
Yeah. And Victor always spoke glowingly about you, but he never really sort of let you out very often. So I've only really got to know you properly over the last, you come to my engagement party, but I've only really got to know you properly over the last sort of year or so. Outside of your own portfolio and chatting about it, did you guys always talk business at home around Right Property Group and it being the right business to be in?
If we go back, yes, we do. We do that. We have our weekly sessions. Either we're talking about the property portfolio itself or the business. And even before that, the conception of the business of Right Property Group, when we first, you might recall, when we left working as radiographers and went into business, everything we wanted to create was about providing the education and support. So that culture has gone throughout the business. It's filtered all the way through into the people we employ, the clients we have. It's all about educating and providing them the support and the network. I would say the Right and Track that you might recall, that was initially done for giving people the support, the investors. When we were investing in the beginning, there was no someone to, get the feedback from or we would feel like we're just alone doing this and we got no one to, talk to about. And the whole thing was about this creating that environment. And so when you said, do we talk about business? We look at the whole business as such. Are we providing the support to our clients? Are we providing the support to our staff? Is everyone heading in the right direction? So it's a holistic approach with our business. And the whole reason about doing business was, what are we going to do in the world out there? The reason to become wealthy was about for us to give back to the world. And at that time when we started our business, it was more like we took it on ourselves as if we had to make all that money so we can support all these disadvantaged people out there in the world. And obviously things have changed. The way we think about things now is different because we've got more mature. We know that's not exactly how things work, and it's a collective that we can make, that impact or out there in the world. Is not just for us. And so the opportunity is out there. That's the mentality, and that's the That's the way of thinking about business. And so we've got a long way to go in terms of achieving that. But yes, we do talk about business and the whole lot of the why we're doing the business and how we can make the difference through the business.
It's I was organising my library on the weekend, and I found your book, Victor. I picked it up and I had so many property books. I picked it up and went, that's right. Maybe that's just a little bit old now. And I read it. It was a good book. But your story is a good one, and it's a great migrant tale, and all that is possible for migrants coming to Australia, particularly leveraging property as an asset class for grow and create wealth, and the business that you've now created. I don't know if I've ever asked you, Victor, what was the first property that you ever purchased in the as a buyer's agent, as in a professional buyer's agent? Do you remember what it was and who it was for?
That's a good, yeah. I actually don't know who Ground Zero was, because initially we were helping friends and family locating the properties, and then the penny actually.
So you're doing so you learned your craft by helping other people,
absolutely.
And doing it yourself.
Because people were naturally gravitating towards us at the time.
And the penny dropped when one of my friends offered to pay me to find the property, and when I found the property, he insisted on paying me. So I said, hang on, I've got a business on my hands, and I can actually get paid for following my passion and helping people invest in the right way, no pun intended. And that's how the true genesis of Right Property Group was, that it stems way back to when you and I stopped working as a radiographer and started, we tried retirement. No such thing. And we realized that we're helping people anyway during our time away from work, because everyone's asking the same question. And when you get offered to be paid for something that you're truly passionate about, it just makes it more fun.
That's pretty good. And was there like an aha sort of inflection moment where you come home one day and went, Reshmi, I reckon we're onto something here. Yeah? Do you remember was there a time where you went, hang on, let's do something about this?
Yes. That's finding that niche that people talk about when doing a business. It just came to us in that way. Like, I think this was in the garage in Minto, remember? One of the houses. Minno, house, which where we had the big chart and the wheel, we called it, of all the
Wheel of Fortune.
All the
Is that how you used to pick properties? Just
No, in terms of, we were mapping out our journey and who our key players were professionally, right? And we said, again, I reckon we could do a better job over here with the right coaching. We could do a better job or help this sector do a better job. So your conveyancers, your solicitors, your mortgage brokers, your accountants. So we started getting people close to us that were in those fields to become more like a wealth hub than anything else. One of the initial things what we were doing when we were coaching people was that we'd coach them, and then they'd go out into the big bad world and end up buying the wrong property, because we've activated sort of the system, but they don't know how to follow the system. And that's when the true guidance and the actual searching for properties directly for the clients eventuated.
And creating a wealth hub, maybe you're ahead of your time, because it's very cool and modern things to do now. And I was tuning into, and for those of you who listen to Property Investing Insights on the Property Investment Podcast Network, there is other installments to this, and you can find that direct if you just search Property Investing Insights. Speaking of the wealth hub, you had a recent guest. So every second, you do it twice a month, and the second time you do it with a client or a guest or someone else.
Where you're not the co-host, and it's a lot more meatier.
It's a lot more meatier. There's a lot more information, a lot more detail. Runs a lot better production, all that sort of stuff. With a friend and colleague of both ours, Ross Lacane, who was certainly part of that wealth hub once upon a time. And I think I sort of tuned in a little bit in the car the other day, regaling the listeners on his stories investing in property, and he's formerly a mortgage broker with Aussie. But you've done well to sort of connect with a group of other professionals who have a sort of consistent attitude and approach and philosophy to property investment with you, and it's helpful.
It is helpful, and they've all gone through the same journey. And in fact, one of our colleagues and I were talking about the mistakes people make as they as they start business, especially when you've got such information that's out there that everyone wants to jump onto the property bandwagon, and most people are time poor, right? So they go to people that can enable them to purchase properties, particularly interstate. And the initial mistakes most people make is that they reset to the lowest value in terms of the purchase, right? And invariably it leads them into, say, regional areas that are subpar. I'm not saying that regional areas should not be invested in. Absolutely, you should. But you need to really make sure that you're not just focusing on the dollar value purchase and the returns on paper. It needs to be returns in real life.
Has he changed a lot over the years, Reshmi? Does he still have the same spark and passion he used to sort of 15, 20 years ago? Does he still get excited about property? Because I must admit, I struggle to get excited about property these days. I find it fatiguing.
There's a lot of fuel. There's still a lot of fuel. He's streamlined because right in the beginning, when we were starting the investing journey, we were making all these mistakes, and over the years I've seen like how streamlined we have become, and to the point that when we put a property to a person, like to a client, if we say this is the property that suits you, and they go around and say, oh, I don't think I like that or whatever, they are not understanding why that property was given to you, and we get really frustrated. Like, come on, this is really going to do what you want to do. So, but we can't say that to the client. But he is very streamlined and very methodical and full of energy. Yes.
And you're talking about property, obviously, right? For a moment, you got me nervous, right?
No. I know he's not very handy, and he probably just sits around and walks around in his slippers all day. And I don't know if you smoke a pipe yet.
No, I don't, mate. I've never smoked. Reshmi is a better handy person than I am. Yeah. No secret.
Nah, I've got my toolbox. I fix a lot of things.
Seeing that, and sort of focus today's chat is. It's a bit of a dichotomy sometimes, but you've been doing this for so long, personally and professionally. I think I mentioned beforehand, and we sort of said that you have a portfolio which is quite large. Mm-hmm. You've probably seen most of it all. You've probably made all the mistakes that you probably can make, and hopefully you still don't make too many. But it must be a little bit like a nurturing parent working with property investors who may be early in their journey, where as much as you want to, you don't want them to hurt themselves and make mistakes. But part of the process is they need to make those mistakes to generate their own scar tissue. So it's what you were saying just then, Reshmi. You know the right thing for them, but sometimes, and you will tell them, but you have to let them go and make the wrong call sometimes. It must be very, very tough to balance that.
It is. It's sad because not only they're losing on the time, they're also not making the most of the money that they've got. They could make better decisions. They could choose the better properties because they're looking at the property on its own rather than, okay, where is this property heading? Where does it fit in the portfolio? What's the result it's going to get me? So that's where, because they're looking at the particular property rather than the holistic approach of the portfolio. So that is very hard. Like we have to kind of, let's say, feel like shaking someone and saying, hey, look, but this is what's going to happen if you did this, But again...
But you got to go, make mistakes.
Yeah. It's the horse and water scenario.
Yeah. But there's got to be, like if I was going to say you, what are the top 5 mistakes that you don't have to make anymore in property? There must be some hard and fast things that are just completely avoidable now. Mm-hmm. What would they be?
Well, if there's a mistake to be made, we've already made it.
Yeah.
Right up there. So just setting that as a platform. And I guess the biggest mistake today that people make is they focus on the debt rather than the money needed to control the debt. Right. So what I mean by that is that let's say that they owe $1 million on their portfolio. They're focusing on, I owe $1 million and interest rates are at 7%, 7.5%. but they're not focusing on, okay, with that portfolio of $1 million debt on it, how many dollars per week am I chipping in to control that? Because that debt then controls a growing asset. And
this is on the assumption, though, that the
you
asset
bought the right property. And of course, there needs to be a dynamic approach to the property. So when the rates are high, you need to find ways to balance it out or have the buffers in place to sustain that hard run in the portfolio. So in a journey, you'll have easy runs, hard runs, and mediocre runs where you're thinking, okay, I haven't done anything for 2 years, right? But it may be outside of a capability because life's thrown a curveball at you, or finance is not right, or for your portfolio, it may not be the right time to jump back in and get back into the acquisition mode. So you're going through acquisition, then you're consolidating a little bit, then you're acquiring again, with the eventual end story being that you're getting to a defined income at the end. Now, that end could be 10 years, 15 years, 30 years down the track, right? Each person's different. And so the biggest mistake I see people make is that, and then also trying to keep up with the Joneses, right? So they're trying to, if everyone's buying in Queensland, everyone, they follow there rather than looking at their own portfolio and saying, is Queensland a good fit for me, right? Not saying that we shouldn't be buying in Queensland. Yes, there's still really good green shoot properties in all states. We just need to make sure that you're fitting in the right piece to unfold the full picture in the jigsaw puzzle.
Because everyone's on their own journey and everyone's scenario is different. So what works for somebody may not necessarily work for you based on what the market is like. Lots of other variables that control that. So
you guys have made most of the mistakes available to you.
Spill the coffee.
That's the mistake.
There's probably a metaphor in that. Around, I'll leave it there. But mistakes do get made, and it's okay. And it's how you respond and react to mistakes is probably the best way to grow as a property investor.
Absolutely. You don't cry over spilt milk.
You don't cry over spilt sort of cheap coffee. And it looks like the dregs of the coffee as well. Don't buy the dregs. Don't buy the dreg properties either. Is there any fundamental mistakes that you guys have ever made that you haven't been able to come back from?
We've always found a way, because when you're purchasing the property, you're looking at the worst case scenario first, right? So one of the things we realized very early on is very easy to get into the property market, much harder to get out of it, right? Because it's got a transactional cost on it. So with a lot of it, we've been able to come out fairly quickly. Yeah. But there are a few, like our Salamander Bay units that are lingering around.
Did you buy units in Salamander Bay? That's something in Nelson Bay, isn't it?
Yeah, serviced apartments there.
How many did you buy?
2.
Oh, God, you still got them?
So look, mistakes happen when 3 things happen, right?
They sound like your kids' holiday homes, right? Here you go, it's a gift.
That's true, yeah. So there's 3 things at play: greed, stupidity, or just fudging the numbers, right? This one had all 3 on it, right? So on my part, right? Because I got that for a song back 20 years ago.
What's a song?
No.
10 years ago, sorry. Yeah. A song, probably about at 70% of its value.
Oh, okay.
And
17 years ago.
Yeah, 17 years ago. There you go. It's been that long.
Yeah.
And the idea was that we'd take friends there and family there for holidays.
We're doing it now, 17 years
17 years later, we're starting to do that now.
So Salamander Bay is pretty cool. I know that.
It is.
It's on the left-hand side where you're driving up to Nelson Bay, right, by memory?
Yep.
There's a go-kart place near there.
That's it.
And there's a winery just down the road, which is nice. But so you're actually getting up there now, are you? So you're enjoying it? Yeah. That's cool. But, it's sometimes the best mistakes you make are those that you realise the benefits on later on in life, and at least you're capitalising on it right now. But you've done nothing which was sort of impacted you significantly or might have slowed you down. Like what's the biggest impact of the mistakes that you've made? Is it poor allocation of capital and slowing you down and missed opportunity costs?
I think it's
the mistake. I was just thinking about when not understanding your cash flow and the cash flow is hidden by like the business would cover the cash flow, so the negative cash flow. So not having the finger on pulse at that time. And this is all, see, a lot of mistakes were being made in the beginning. And then when we learned, we streamlined and not making mistakes now. But we're at a comfortable position where we're really not making any mistakes. But we've got that knowledge, I guess, that's allowing us to keep the mistakes away. So the biggest one was, back in those days, the not having the finger on pulse on the cash flow, the negative cash flow. So,
which takes time, energy and effort. And I sort of duck and dive into it every now and then. I go, the cash flow's not right in the portfolio. And you just go, it's not really like I can do. It's not like you can do about it, right?
That's right.
You know, sometimes you just
got to weather it.
Got to weather it. And I think a lot of investors are probably in that position right now. If they do borrow money, the rates are a lot higher than what they were a couple of years ago, but they're up sort of towards their long-term averages now, aren't they?
Yeah, that's right. Yeah. And in terms of what I mentioned with our Redcliffe foray, that was we had several things that we are doing that was way outside of our comfort zone, and we didn't have a system in place to actually handle that. So we
not understanding the process, I guess, which is what.
Yeah, so we attended a seminar where they talked about, this is way early in our journey, right? So we attended a seminar where they talked about subdividing and creating the equity, creating the cash flow. And I couldn't make the numbers work in New South Wales. So of course I went further afield. And we ended up buying a property in Redcliffe in Queensland where it already had a DA on it. And the DA basically allowed us to bring in another home, plonk it on the yard, shift the existing one to one side, so creating two lots out of the one block. Yeah, makes sense. So several complications. One, didn't know how the finance really worked on those developments, first development ever. So I'm complicating it by doing it in another state, doing it without any mentors and not having a system in place or the buffers in place. And the obviously trying to shave dollars here and there. So when the builder basically said, "Hey, I'm here in the area, and if you want, I can lift your house and slide it across and put it on stirrups while we're waiting for the rest of the pieces to fall into play, and I'll charge you $12,000 less." Right? Jumped at it, and the long and short of it was that, try and get finance on a house that's sitting on drums, right? So that took us out of the market for about a year and a half.
Oh, because you'd actually
moved the house,
jumped
right?
it. You moved it before you got finance, and they went, "That's a relocatable home."
That's right.
Yes.
That's right. Yeah. So and then we went and bought a existing home. So in Queensland, as an example, when developers are developing a block, if there's an old Queenslander sitting there, they'd sell it for next to these holding yards, and they'll take it off that yard, off that site, and take it to the yard. They renovate it, and it sits there ready to be bought. Right. So back then, we picked up a house. So we're talking 2000 and
we didn't have any children.
2004. So. Pioneers, absolute pioneers in the area in terms of interstate investors, and latched onto an agent that was good, but then found that trying to do trades from here, internet was really at its early phases at the time. So trying to find trades from here was pretty diabolical. So we got this house that we paid $37,000 for, sitting in a holding yard and ready to move, and without understanding the full DA process. We paid the deposit and got locked into a contract to buy that house for $37,000 that now needs to be transported to our lot across several council areas. So that's another issue where you've got to get permission from council areas to take the house through there.
Do you?
Through the corridor, because
we've got the trucks, it's loaded on the truck. You have to.
So that's then created its own knock-on effects. So we spent a year and a half trying to unravel that, and had to do the development without finance in place. So that sucked away all of the equity from the other properties that were not sitting on drums, and quite a bit of our savings as well to finalize the development. Right. In the end, it worked out really well, but that was a stressful 18 months because I bit off more than I could chew.
Yeah.
And I was trying to systemize and create systems on the go rather than latching onto a mentor and paying someone to take me through the journey.
Yeah.
Someone that had already done subdivisions, right? So that's the biggest mistake.
But we were very young. We thought, okay, we need to put a house there. We'll just bring a house and put it there. That's it.
It makes sense,
That's
right?
it.
Yeah.
So you split the block into two.
Yep.
So an A and a B. So individual registered blocks.
Yes.
With their own services and everything. And so the original house, did you put it towards the back of the block?
No, it's to the
Side
side.
by side.
How did you get the other house around it?
No, so we shifted. So if it's a rectangular block, if you can
Yeah.
imagine, the original house was sitting in the middle on stumps,
Yeah.
right? So we
Slightly
jacked it up
towards
and
the other.
shifted it to one side, so
Yeah.
it creates enough room to have the new house next to it.
And you were able to back it in
Yep.
and get it up there. Were you there for that?
We took a video
Yeah, we
of
took
it.
a video, yeah.
Oh, I don't know where it is, but
Yeah.
we took a video to show our children one day. But children have grown up. and we
Yeah,
haven't
those were the days when you actually had those video cassettes.
Yeah, I
right?
remember
So
that.
it's somewhere.
Oh,
there.
you actually like a handy
yeah,
cam.
yeah.
We've got
It's not
the
that
truck-
long ago,
truck
right?
Putting the, yeah.
It's surprising how quickly
Technology's changed quite a lot.
Wow.
Yeah.
So, yeah. These days you can FaceTime it, right? So you
Yeah.
don't even have to be there. And
And then we found out that the house did not have a.
yes, that's right. Yeah.
Didn't have a toilet. The
Did
one
not
that you
have a
bought
toilet.
didn't have
Yeah.
a toilet.
No.
Didn't you have a look at the house beforehand and say
We
there's
did.
no toilet?
We did.
You
We
didn't
just didn't
realise
see
it
it.
didn't have a toilet.
It was so keen to get things done that we overlooked a crucial thing, right? And
So would you have to renovate it, put a dunny in?
yeah,
We
yes,
had to.
with the problem solved. That's where as through our journey we encountered problems and we found solutions for
Yeah.
it, right? So on this one we turned the linen cupboard into a toilet, right, and made it an open flow bathroom. And this was not through my or Reshmi's expertise. We leaned on the tradespeople there and kept asking the question, right? If you ask keep asking the questions, you will get to the answer
Yeah.
that you need, provided the quality of your questions keep improving, right? And that's what we did. And I guess the biggest mistake there was being a little bit too late to solve the problem. So we did have a bit of a fear paralysis. What have we done? But then we picked ourselves up, dusted ourselves up, and said, "No, let's get on with that." And it was a
Do you still have the properties?
no. We
We
actually sold
sold
that in the last
2 years.
yeah.
Do you sell them together or separately?
Separately.
Separately.
Okay.
Okay.
Two separate titles. And the reason for that was that it had done its job in the portfolio. And by selling that down, because the maintenance was now starting to pile up,
Yeah.
to sell that, that helped free up the debt on other properties within that entity.
Yeah, okay. And speaking about entities, so the way you guys are structured, you have multiple trusts in different states for different things.
We do own property in our personal names as well, quite a few properties in our personal names. And we have hit land tax threshold in most states personally. So it makes sense to flow on into structures such as trusts. A lot of times people make it too sexy and say, we need to buy it in a trust. No, we need to look at all of the net flow-on effect of buying in entities. So have a good accountant that explains all of that, not just it's good for asset protection.
Yeah.
What are your tax consequences? What are your pros and cons? And is it really suitable for you, right? So they were, one of the things we did really well right from the beginning was we paid for really good advice, right? We sought out referrals from our solicitors, from
your wealth network.
Yeah, well, from a wealth hub, right? So
The wealth hub.
Yeah, and we got the right players to get the advice of, because they were they already had the runs on board and they had the expertise, and they were also advising people with the same level, if not higher level of achievement than us. So we're not guinea pigs for them either.
Yeah. Yeah, which is you don't want somebody learning on the fly with
No,
you, and then they can go and sell those learnings to someone else, right? You want to pay for it. And so what I sort of hear from all this, Reshmi, is irrespective of how thorough or planned you are, you're going to make mistakes, right?
Absolutely.
So it still always comes back to the actual investor to make the right decisions. They're in charge. They're the captain of the ship.
That's right. No, looking at how the market is, how volatile, how there's so many different variables within that market, and I was thinking this morning, like, you know what? How well you can sail that ship and how well you can navigate through those waters is who is at the helm, the experience of the captain at the helm. So it's with our experience, I guess we've gained that experience over the years, and it's the thing that I'd really like people to not make a mistake about this when investing is really look at the experience of the person guiding their ship.
So in many ways, then, you guys, using the analogy of sailing, you can't predict the weather. You can only react to the weather. You have a destination, but you don't often always get there in a straight line if you're using a sailboat, right? You got to tact and stuff. But using that same idea is the property investor is the captain of the ship, but you guys sort of rock up if it's a big tanker in a little pilot thing and come on board, and the person that knows the harbour better than anyone else sits behind your shoulder and tells you steer left, steer right to get a ship that you might not be in a familiar harbour with through the sandbars and through the breakers and into port, right?
Yeah,
That's you guys are the pilot in many ways.
You can put it that way.
Yeah, which is not a bad way to think about it.
It is, and I guess with the way information flows today, it's very hard to judge who the best pilot would be, unless you're really honed down as to what you are trying to achieve, right? So, are you trying to get out of port or in port, right? That's a big difference in terms of the course you'll take. Is the tide in or out? If I can go down that analogy, and is there a rip that's or a stiff wind that's pushing your ship off course? So how do you correct it, right? And all of those things need to come into play, and that way you'll truly understand that investing is never a linear journey, right? And often a lot of people jump onto the bandwagon of investing after they've seen social proof in their own network, in what they've read and consumed in the media. And more often than not, they're jumping into areas that they shouldn't really be, because it's too late to get into those areas. So if I stay with the ship analogy, it's after the tide's gone out, so you no longer have deep enough waters to navigate, and you still will be able to get out of port, but it may be more dangerous to get out of port. So that's something that people should really take away, is that don't be too hasty in pulling the trigger when you're investing. But when you have pulled the trigger, don't be slow in making decisions, right? Because you need to, especially how fast the market moves with digital signatures and digital inspections of properties as well, and a lot of people buying sight unseen, which I don't agree with. You really need to be able to get into a position where you can make your decisions quick and fast, because making a slow decision will tend to get you out of opportunities, right? We've had that in the past as well.
Yeah.
So a good example of that is in my own personal portfolio, I got a bit too busy and didn't sign a contract as soon as it landed in my inbox. And this is about 5 years ago. And I took a day to get it signed, even though I had flicked through it. And by that time, there was another offer which was about 15K higher than mine. So I had to go to 17K above my original offer. So it cost myself 17K by being slow.
Do you generally believe there was another offer there, or was just a crafty real estate agent?
No. This was a real estate agent that I trust. So.
Are you talking about the property where the vendor didn't want to sell the property when he found out who the buyer was?
That's a different one.
Oh, really?
Yeah, that's different.
So when they found out it was you, they went, I don't want to sell it to that guy.
Don't sell it. Because
because there must be money to be made on this property, so I've decided to change my mind, not sell. So, yeah.
There was one.
I'm sure it happens, right? Well, if you get a reputation for securing under market value properties and you see your name in a contract, you got to go, oh, maybe I'm selling this under market.
Yeah.
Right?
Yeah.
It's,
There was one.
it's a small industry still.
It is. It is still very much a small industry.
Yeah.
And it's growing fast.
Yeah.
And that word under market gets bandied around a lot, right? And the reality of it is it'll sell for what someone's willing to let the property go for.
Yeah.
And it may be under market for me because it's a better fit in my portfolio. So for me to pay under market, I may be able to pay 30K more than what you are willing to pay because it's got a better fit and a better I can see a better use for it in my portfolio, right? So the under market really comes into play first as to how it'll impact your portfolio. Then of course, yes, you need to obviously not pay overs, but also at the same time, don't be so caught up on the price that you lose out on the bigger opportunity by $500, $1,000.
Yeah.
That's why the auctioneers always say, no, don't lose this property for $1,000.
That's what
a good selling point.
Do you still get the same buzz out of it as you used to, like signing a contract, or is it just another day in the office?
No, it's just a
No.
process.
Yeah.
We love the hunt.
The hunt is what you like. Yeah, the hunt is what you like. So when you know you've found something which is good and right,
Yeah.
RIGHT. Yeah. And do you find that when you're working with new clients, they might be new to RPG and or they might be new to investing in property, either or, are they a lot more educated now? So we're talking about mistakes are good, and there's an old adage that I sometimes use. I didn't like the lesson, but it was a good lesson, right? Which means that I wish it didn't happen. However, I'm fortunate that it did happen because I'm now much better geared for the future, right? So are people now more accommodating for mistakes, or do you think people are making less mistakes now through education? Because with the benefit of 20 years doing what you've been doing?
Okay, so there's two aspects to this, right? If they come under our guidance, then obviously we've got 20 years of different experiences, right? So it's not just 20 years of the same experience, right? So we've done many things and we've invested in many markets in many states, right? In many phases of the building up of our portfolio. But where people do make their mistakes is really based on too much information, right? And they get analysis paralysis, and they then try and follow the herd or the flashier, sexier advertising, or the areas and the types of properties that everyone else is buying, and not relating it back to their own circumstances in terms of, okay, what's my financial capability, right? What's my goal? Not so if you do what everyone else is doing, you'll get their result. We'll get everyone else's results, right? So if you back it up to stats, you've got 80 to 88% of investors in Australia are owning less than one or two properties, right? And the ones that are owning multiple properties, they are either selling down within the first 3 to 5 years because it's become too hard to hold because they've just gone after the number of properties. But the ones that are really well-rounded in terms of their portfolio, they're really looking at it from a viewpoint of, okay, this is a process. This is a journey that I'm going through. It'll have its ups and downs. And believe it or not, there's only circa 35,000 that own more than 6 properties.
It's crazy, isn't it?
It's crazy.
There's not a lot of people. And you think about that in the context, it's a NRL football ground full of people, and that's representative of all of Australia. 35,000, more than 6 properties, who certain segments of the government now don't particularly like, because they think they're responsible for housing affordability, but it's outside of that recipe.
So I just wanted to add on to the understanding of, I've lost it. Sorry.
Got that?
Give us to the outtake video.
God. The age factor.
Okay.
So your question.
Can't remember what my question was.
Mistakes people make in terms of getting properties.
So the level of education, the level of information that's out there, and not being able to decipher whether that information is the right one for them in their circumstances. So one thing people look at is where people are investing, where to get your loans from, and whether I have the affordability and all that kind of stuff. But the biggest other factor that they fail to see is their own life and at what age are they beginning to invest, or where are they sitting in their life, and with what everyone else is saying or doing, whether that is right for me at this age. And if you see that, once you know at what age you should be investing and in what types of properties at what age you should be investing in, and that makes a difference whether you'll get that result or not. So I guess we were talking about this in the car.
That's right.
The types of properties people choose at the different ages of their lives. And that is something you only gain. That comes from the experience. Even our choice of properties, that what we were buying back in those days to what we don't want to buy now, is very different.
Yeah, I'm the same. There's certain properties in my portfolio where I go, I just don't want or need that stuff anymore. I just go, and because I speak to a lot of property investors and professionals like yourselves in property, and you sort of sometimes get sort of lured back into it, right? Where I'll sit there and go, wow, people are buying good properties in Perth for $350,000, $400,000. Well, maybe I should get in the game there. And then I sort of check myself and I just go, you're selling stuff like that now, mate. Like you don't need it or want it.
That's right. Yeah. And so it's the wrong type of property because we're incredibly advanced age and the portfolio that you built, right? So all jokes aside, right? So understanding the cycle in the area and where it is at the moment, what the normal cycles are from bottom market to next peak, and also comprehending that those cycles are getting shorter because of shortage of supply. Right? Yeah. But understanding also that if that's their normal cycle and if we're almost at the peak of that cycle, the type of property you'd buy there may change because of what you're trying to achieve. So bringing in the taking away the risk factor. And also in terms of how many more years of gainful employment you've got left. To weather those cycles if it goes against you. So if you're more advanced in age, you'd want to be getting into the shorter cycle areas as opposed to the longer cycle areas, right? Nothing wrong in investing in any of those states. It's just how you invest and when you invest in which area.
So I watched your market update the other day, which you sent through, and I don't think you've done one for a couple of months because stuff's been going on. And you also said, well, nothing's really changed enough for me to warrant doing another market update. And I sort of take the point, right? Like a lot of people think you need to be updating everyone on the market on a daily or weekly or monthly basis. Well, property fundamentally moves pretty slow and it moves at fractions of a percentage. People go, oh, wow, property's up 1% this quarter. Okay. And is that really going to start changing tactical buying decisions at the moment? But while I've got you here, Victor, and I do watch and listen to your stuff.
I'm really surprised, Phil.
Well, it's funny, isn't it? Most people think I wing everything, but no, I do actually like to keep informed. But you said, and I'll paraphrase, and I might get this wrong, that maybe you've missed Perth, right? Because it's still everyone's talking about it. It's still this property investment hotspot. Are you of the opinion of it's towards the back end of its growth cycle?
It is an area
because we're talking about timing.
Yes, timing, right? So the best time to buy in Perth was probably about 2-3 years ago, right? And if you've missed that boat, you need to be really mindful of what you're buying there and understanding that you're buying towards the peak of the cycle. And it may go sideways for a little while after we sort the supply issue, right? Whilst there is a supply issue, there'll still be demand. And knowing that we've got very recent social proof of very strong growth, as soon as lending becomes easier, whether it's via assessment rate or via interest rate, people will try and emulate what they missed out on, right? Yep. So it'll be a little bit of a self-perpetuating, but what's beyond that, right? And this is where we need to look back into the normal cycles in Perth and see what's happened in the normal cycles when the stimulus
nothing happens for 10, 15
quite
years.
A while.
So I reckon that's going to happen again. We're going to get this rate of growth. It's going to go flat.
Yep.
So if people haven't bought well, it's been hard not to buy well in Perth? There's still some properties you
There's still properties that I'm still buying in Perth, but I'm no longer buying volume, right?
Yeah.
And I'm very selective now as to which age group and which exposure in terms of investors that I put in there.
So you'd want to be younger and being able to weather cash flow, I guess, is one contributing factor is that it's stronger out in Perth
It's
than
much
where
stronger
it is
there,
elsewhere, which means that if you do get a period of a decade, which happens in Perth where nothing happens, you can carry that property. But that means you've got all that money tied up
That's
for
right.
a long period of time that's not working for you. And I think that's going to be where a lot of property investors find themselves. I think you're going to have a cohort of investors who will just add to the 88% of property investors only own between one or two properties. And I think a lot of them will be in Perth who have bought during this period of time. That might be topical to say because you might have bought well and got some capital growth, but you got to extract that and that costs money.
Yeah.
But you can hold on and leave your money there for 10 years and not deploy that elsewhere.
Yeah.
I think that's what's going to happen.
Yeah, it will. And this is, just want to caution the listeners that just because we said don't buy in Perth doesn't mean there aren't any bargains there. There aren't any good properties. There's still very good areas. We still find properties there. It's just that we need to be a whole lot more discerning in that market as opposed to other emerging markets, right? And you can't do the analysis just based on headline figures, right? So headline figures meaning that the gross rent and the purchase price as a yield perspective, because you also need to look at the running costs, so the immediate running costs of properties in Perth, the greater Perth area, is going to be substantially higher because we've got less tradespeople around. So your maintenance costs will be through the roof. There's something in the water there because they do charge a whole lot more for property management. Yeah, and you've also got ultra competition in terms of all of the tradespeople are tied up in major infrastructure projects in Perth. So WA is doing really well with the infrastructure project. So that's creating a shortage, right? Now, flip side of the coin, you've got a lot of migration, intrastate migration, interstate migration, and overseas migration coming into that area. WA as a state did really well post-COVID in putting themselves on the map for a destination. Right? And every now and then we see these articles raise heads up where Perth prices are going to overtake Sydney or Melbourne and all that. And if we look at it purely historically, it's always been a flash in the pan.
Yeah. So are there places, you say that if I was going to be buying in Perth, I would have been doing it 2-3 years ago, which I did, by the way, just saying. Do those places exist today somewhere else in Australia?
They do.
Are you going to tell me where they are?
No,
It's a secret.
you have to engage the services to know about that, right?
I'll ask you off there. I won't tell anyone. Promise.
Open mics, that's what they have over here. Again, people get honed down into which area they want to buy, right? Wrong question, right? It's what do I need to buy for my portfolio and for my goals and for my life circumstances.
Yeah.
The minute you start answering the question that way, you'll be buying the right type of property in your portfolio.
Yeah. And this may be the main mistake most people make in property is that they
ask the wrong question.
They ask the wrong questions or they identify somewhere where they want to buy because that's what the media's told them and then they extrapolate the questions they ask themselves is with a biased answer.
Yep.
To show, what do they call it? A decision bias or something or other. So maybe that's the biggest mistake. You've never done that though, have you? You two?
No, we haven't followed the herd. We've always,
Somehow we were lucky.
Yeah.
We were getting in at the right time.
A lot of luck in property. Yeah. Well, you guys,
and then we learned as we made the mistakes. But the good thing was the properties we bought were just, the green shoots time. And so it was okay. And then the mistake was just not understanding the cash flow, having the finger on the pulse of cash flow.
I guess the answer to this is everything is relative, but it feels as though it's a lot harder today than what it was 15 years ago to buy investment property.
Yeah, there's too much information.
Too much information,
right? So
there's too many people doing it. It's harder to get debt. It's the numbers are smaller, but relatively they're probably similar. So are we going to be thinking in 10 years' time, it's pretty easy to buy property in 2024? Remember when prices were only $1 million for a place in X? you know,
The same.
like we're going to have, we will be talking about that, right?
Yeah.
Yep.
Yeah.
Just like, the properties we bought initially, like 200,000, and now they're like 800,000. So the same.
It's crazy.
And we've done nothing to apart from just held it and had the ability to hold it, to let the market do what it always does in a well-selected property in a good area.
Because I often get sort of annoyed or fatigued with property or investing in property, and I need to sort of reassociate myself with it. And I always just pull up a capital growth calculator and I put numbers in there and I sort of,
It's amazing,
you
isn't
know, I put 5% growth over 20 years and I go, that's why.
Yep.
That's why I'm doing it. So then it comes back to the point that you made. It's not how big the debt is, it's what you need to contribute in order to control the asset.
Yep.
And that is the secret of property investing.
That aha moment that you just said, that is in my life a couple of years ago. I just, I know we were all really investing, buying all these properties and all this, it felt like we were not seeing any results, let's say. And a few years back, I was like, what? Is that what we've got? When that happens, and you see the results, it's the shift. Then, you were doing it when you putting in the hard work. Yes, you knew you had to do it, but there's a different level or layer of the shift happens. Again, when you see the results, it's like, we all talk about living in the world of abundance and all that sort of stuff. It is, yes, you do all that, but it's just a real, true feeling that you get, which shows you how much it opens up for all the different opportunities. There's so much more you can give. There's so much more you can do once you have that shift, because you know what you did and what you believed in worked.
It can be fatiguing when you're doing it, cash flow management, I'm going to pay that and stuff. But there's a huge amount of delayed gratification when it comes to property investment. And I think one of the biggest mistakes is people try and chase the immediacy of wealth creation through property.
Yeah.
Making a 30-year decision on 3 minutes worth of news.
Yeah. And therein lies the challenge. So people can buy your mistake experience, essentially, by using
good
right
way
property
of putting
group.
it.
Is that what it is?
You must be a journalist.
Maybe I'm a visionary, Victor. No, but you've known me long enough. I'm a pretty simple guy, right? So I just try and get everything down to its most simple form. Like using a buyer's agent, you would like to think that a big part of what you're buying is
the expertise,
their expertise
the mistakes,
and no scar tissue.
Yeah.
Because I don't want
anyone can buy a property.
Yeah.
Yeah.
I don't want to make mistakes that someone else has made and can tell me not to do that.
Yeah.
That's pretty cool. There you go. Buy Victor's mistakes. How are you guys finding it at the moment? You're busy? Because I speak to a lot of buyers agents. A lot of them are saying, God, we've had to stop taking on new clients because we just can't find the right assets. Yep. Is that a universal thing at the moment?
It is a universal
for the good buyers agents,
for the
I guess.
Good buyers, absolutely. Yeah. So we haven't changed the criteria to cater for less properties in the market, right? So we're still very stringent in what we're buying. So yes, it's taking far longer to find these properties. And when you do find, we need to move really fast, right?
Yeah.
So there's several false starts here.
Yeah. So and that's the mistakes that you certainly don't want to make, at least on your side, is that you don't want to be spinning your wheels for people who aren't able to make those decisions quickly. It comes to education, engagement, making their planned and prepared. But back to the team do a lot of that heavy lifting for you. So
they do.
When you're chatting with someone, they're ready.
Yes. Yeah. So there is a stringent process and a fact-finding conversations that does happen before they eventually end up talking to me, and depending on their preference, sometimes with Reshmi as well. Reshmi does mentor a lot of women.
Oh, really? Yeah. Okay. So you don't have to speak to Victor.
You don't have to. You don't have to.
Does it make any? I don't know if I'm allowed to ask this question. Does it make any difference if it's a male or female? Do they do things differently?
I think
I'm sure
so.
with the women are probably a lot smarter and erudite. But
I even though Investor Women was created to
Well, hang on.
mentor women.
What's Investor Women? I don't know about this.
That's a coaching company that Reshmi had set up to talk
really?
to
That was a
professionals.
long time ago
Yeah, okay.
for professionals, and that was for mentoring women through for their finances and their investment journey.
Yeah.
That actually started way before. Like that was when I was
2006.
2005, let's say, because when I realized that if I'll be stepping back away from the business, what will I do at home? So then this idea, like I always wanted to do this coaching women and all that, but it was not, let's say, not the right time ever. And then I went into creating the websites and all that kind of stuff, but not really doing much with it. And then I had the baby. That's back 17 years ago.
Yeah.
And then naturally I found that when I would take children to the play groups and all, and then all these women were like, we were chatting. And I thought, well, it seems like there's something there. And I just did it unofficially, let's say. And then it has grown from there.
Yeah.
I've been mentoring women for quite a few years.
That's cool.
And I find naturally the men, a lot of men come in that sense. Like I'm trying to mentor the women, but I don't know. It's just easier to relate with men. Like in the demographics, when I look at it, it's like the 35, under 40s. They kind of, it's easy to talk to them. Somehow they are. I'm not sure why they tend to relate that way, but it's yeah.
I think it's the information. They're more better consumers of the information.
Yeah. It's and I'm conscious that I think in property investment, females are really undersubscribed, at least at a media level, right? It's very sort of male dominated,
It is.
despite the fact that it's normally the women who are the engine room of the families, right? Who are making things happen and guys often, I'm going to be general here, are sort of happy just to keep going as they continue to go ahead. Whereas normally it's the catalyst or the impetus for growth in families is driven by the females. And on the Smart Property Investment Show, we're always trying to get females on because they typically decision makers. I don't want to be general here, but they're decision makers. So
See, women live longer than men.
Yeah.
So the thing is, if the partner dies, or how are they going to manage?
it's really funny you say that. Like to all the women out there, like why you've got a guy there giving you good utility, i.e. earning income, make sure he's doing it well.
Yeah.
Take control, put the money in property, because if you've got another 20, 30 years when he sort of falls off the perch, you want to sort yourself out.
You wouldn't be ready.
There's probably a book in that.
So
Get the best from your man. Work him hard so he brings some money home so you invest in property.
This is now midday TV. Now you've turned into Dr. Phil.
I have a Dr. Phil. There you go. There's something in it. Something in it. But again, back to mistakes. It's not taking action when you can. And I speak to a lot of investors, and the biggest mistakes I've made in property, and you will say the same things, no doubt, Reshmi and Victor, is wish I started sooner, and I wish I did more when I could have.
Yep.
And I know right now I'm not doing anything in property. I'm sitting there going, mortgages and stuff. I'm sitting there thinking sell stuff, right? But I should be buying right now, and I'm not.
But also, you also need to know when to stop as well.
Yeah.
There's an end point to
Yeah,
this.
you don't sit there and just go, what's the benefit? It's what next? So hence the reason why the type of properties I buy now have different purpose and utility for me. They might not be the best investment financially, but they're certainly the best investments personally, right? And this is the difference cadence of how it works. But thanks for coming in, guys.
All right.
It's good. Look at that. Starting to learn all the secrets, Reshmi. Starting to get all the secrets. So if people want to have a chat with you, Victor, or Reshmi, can they actually say, can I speak to Reshmi? Is that? Sorry.
I've opened a can of worms, haven't I?
No, here we go.
Yeah. So there is a definite process, right? So initially, the initial chats and making sure that they get the best of our time, they do need to talk to Kate and Melissa from our business. Both are very prolific investors that have invested in our guidance. So they know the systems, they know the pitfalls, and they know what not to do and what to do. So they'll have a chat with them, get finance ready, and get really full benefit of our time when we talk to them about strategy. So if I bring it back to medical analogy, which is how I built up this process, when you have an ailment, right, and not having money is an ailment, right? It can be fixed. So you go to your GP first, right? And he does the baseline stuff, gets a blood test done, and then he refers you to the consultant or the specialist, right? So that's where Reshmi and I come in, where we're talking strategy and we're talking, okay, how are we getting to the goal, and which types of property we're buying, what rapidity are we buying it at? Is it a very slow, sedate pace because of the circumstances, or is it you've got something happening in 2 years' time, so we need to accelerate now so that we can cater for this hiatus. So there is a definite process in place. It's not like call us up and, hey, we've got a property ready for you. The journey itself takes quite a few weeks to get to actually have a chat with either myself or Reshmi, and then finding the property is quite a few more weeks after that as well. So it's not, if you call me today, you're not going to, in most cases, not going to get a property tomorrow.
Yeah.
Yeah, I think the idea people have is, I want to buy a property in Brisbane or Melbourne, or can you find me a property there? And what we want to say is that's not how we operate.
Yeah.
We're about building your portfolio so you can achieve those goals, your lifestyle, your goals that you've planned out for. So it's more like what would work is what we would provide you with, rather than what you think will work.
And that's the council, right? And that's probably the difference between buyer's agents and property strategists. And there is certainly a delineation between the two. There's a lot of buyer's agents out there who would just go, I want to buy a property in Queensland. They go, here's 10.
Yeah.
That's not.
I don't know if that's really. I guess it's a buyer's agent.
Well, that's a service,
It's a service.
So let's say that is a service that we provide, but we are providing that service with a holistic approach of our investing knowledge. So it's more like building the portfolio, and so why we are giving you that property. That's the difference.
Cool. All right. Right. Propertygroup.com.au or Facebook.
Yep, or Facebook. Yeah,
Find
just send us a message and we'll be in touch.
Track it down. All right. Victor and Reshmi Kumar, RPG, Right Property Group. Thanks for joining us today. I always do enjoy catching up. I'm enjoying getting to know you better, Reshmi. It's starting to see the dynamics and how it all works, which is good. And no doubt we're going to have a lot of conversation into the future. Thanks for tuning in, everyone. Remember, rightpropertygroup.com.au. That's RIGHT, propertygroup.com.au. Go and check these guys out. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.